So with good planning, a retiree can keep their tax bill as low as possible during retirement. And to discuss some ways to develop an efficient tax plan is my guest, Steve Floyd with the Retirement Income Group in Los Angeles. Steve, can you talk about the difference between tax preparation and tax planning?
This is really my background. I had a tax business for many years, and I tried to focus my clients' attention on looking forward as opposed to looking backward. Any accountant, any CPA that's worth their while will do a great job in accounting for what's happened in the past. Tax planning is a little bit more involved than that, and it's more involved than just putting money in an IRA. A lot of times there's other things that you could do to make sure that you're paying the least amount of tax possible, but you can only do that in a retirement plan that's got a tax element to it. And that's what I try to do, is give ideas on how to pay the least amount of tax possible in a total financial plan.
Now, how do you know if a Roth conversion is really a good idea for a client?
Well, I'm going to answer that question with a question. Where do you think tax rates are going to be going? Now that we've had the COVID bill passed, spending a couple $1 trillion, we also have areas that we're increasing our taxes over time. And in fact, taxes could be increased in 2025 when they go back to their 2018 rates. So my question is, where do you think taxes are going to be at that point in time? Specifically with the Roth IRA, if you think taxes are going to be low, this would be the time to do a Roth conversion. The other element to consider is your cash flow. So if you understand where your taxes are today and your taxes are going to be potentially down the road, whether they're higher taxes or lower taxes, and then factor in your cash flow, you'll get a much better idea how to do this. One thing that I recommend to all my clients, you need to review Roth conversions at least once a year. Sometimes it might be logical, sometimes it might not be.
Now, are there any other tax strategies a person should be aware of if they are already in retirement?
There are many strategies that they can do. But one thing I found out the retirees have in common, number one, they have a good group of family and friends. They have activities that they really enjoy, and three, they have a financial plan. But when taxes come into play, that's when people sometimes get a little bit lost. I try to make sure that they at least understand the taxes, and they understand one thing: you owe this or you're going to get this money back. That's all they really care about. But I try to explain it to them so they understand, well, why do I owe more this year as opposed to last year? So those are some of the simple techniques that I use in tax planning will get you there.
That's Steve Floyd in Los Angeles, and thanks for watching Retirement News Online.